Hey, folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist. Show to deep dive into silver, platinum, and palladium. We saw some pullbacks recently here in the metals. Have they topped? We're going to go to the charts to tell us what is the most probable outcome. All right, into the charts of silver we go. Here we have the silver daily chart on Friday down about 4.25%. But the kicker is this, is if we want to find out if there's major resistance and potentially a hard level for a bigger pullback. And again, I'm still in the camp that we're not at the cycle high for silver, but I do think we could be due, just like with gold, for a bigger retrace and pullback. And to do that, what we need to do is let's flip over to the weekly chart. And we're going to go all the way back and take a look at the high from 2011. The high in 2011 was just slightly below $50. We have now tagged in the recent move, we got up to almost $55. So the question is there some sort of trend line or parallel here? And to do that, let's use our parallel tool. It's my favorite tool because it is so freaking accurate in terms of guiding me. Not perfect by any stretch, but accurate. So what we want to do is we want to connect those two highs right here. And then we want to drag a parallel down to see if there is a key level to monitor. And what we could see here, which is fascinating, absolutely fascinating. Look at this, guys. Look at this level right here. All right. So what we could see on this chart of silver is that very clearly we have a low from '08, which was the financial crisis low, to the high in 2011. Then we had our low when COVID hit in March of 2020, and we just touched the upper range of that basic parallel. All right, now parallel again, what it shows us the biggest drawdowns here to the biggest extensions. And if you followed me, you know that the parallels have some teeth to them in terms of predicting bigger pullbacks. In all fairness, you look at this major pullback, and I'm not calling for that, by the way. All I'm doing is looking at this to try to gauge if we're due for a bigger retrace in the silver market. And then if we look down here, I mean, look at the buying opportunity in '08 and then again in 2020 when COVID hit. All right, so that's number one. Now, the question is, if this is a high, there has to be more to it, right? I mean, we just can't be like, oh, look at this random parallel. It somehow aligns. Now, granted, it aligns with some pretty impressive lows, '08 and 2020, and then the high from 2011. So there is some major pivot points here, but we also want to find out if there's other things in the chart. Now, the one thing that I was going by, I was saying, all right, well, what if we did a parallel through here, these recent lows? Does that have any teeth to it as well? And this one right here, if we go to these levels, right? So we basically are connecting our lows from 2020 COVID low to the low on this big pullback after the 2020 surge to the upside that came back in. And then notice how it hops along that zone. And so the question is, okay, if we bring this up here, what does it connect to? Is there anything that it connects to? And this is where things get a little bit more interesting. So if we extend this out and let's just bring it all the way back, this is what gets my attention. Okay. What we see here is that we essentially have a trend line, another parallel, right? In fact, I'm going to flip the color on this to yellow so it pops out a little bit more. But here you have a secondary parallel with the low in 2020 and these subsequent lows here. The high we just hit, what does it match up with? The low from 2008 as well. All right, now listen, in all fairness, this doesn't mean that, yes, we are at a major point where we're going to see a correction. Like I said to you, I am a long-term big bull on silver, gold, platinum, and palladium. Because again, as I've always said, the government, we can clearly see the government does not have the teeth to it to cut spending. They just don't have the incentive until the market, meaning the bond market, makes them by rates surging up on the long end. I don't think the US government will ever cut spending significantly to get things under control because a politician's goal is to always get reelected. I mean, even if you're not talking about the president, which he can't run again, right? But the idea here is that he still wants his party to retain power. So he still has an incentive to not make the hard decisions. And it doesn't matter who's in power. We just see this over and over again. It's about the next 4 years, keep the economy good, so keep flooding it with liquidity, et cetera. And that's why my mid to long term is still really rosy. I still think silver, even in this bull run, could get into the 60s, maybe even higher. But what we can't say is that could we be on the horizon of a bigger pullback here? All right. Could gold pull back to 3,500 from hitting 43 to 4,400? Silver, which kissed $55 per ounce, could it be due for a bigger correction? Right. And the answer is yes, it absolutely could. And what I would do is I would use this parallel to guide us to that, meaning that if we lower this parallel down into this level here, could this be where we're headed? And what I'm showing you here is that we have this pivot low, we have in here, and we have right through here. We have this level, and ultimately, this could be where we're going to pull back to give us another buying opportunity on silver. And the idea here is you use your parallels, you move your parallels up and down, and they give us other variations of the trajectory of silver or any chart, as a matter of fact, when it comes down to it. All right. So that's just something that I was kind of contemplating here. It does make a lot of sense. I think there's also a small possibility we could actually go even a little bit lower. And what I'm doing here is I would connect these points, right? So the idea, this would kind of be my worst case scenario, the low from '08, which we've used multiple times in these analysis, right? Through this low to these highs here. And you can see you kind of danced right there and you broke out. And so this could be your pullback zone, which would be around $40. So I would say anything between 40 and 45 starts to get very interesting on the silver chart for a buying opportunity on a pullback. That's if it stops here, right? I mean, remember, and I always stress this because I think people, sometimes they're like, oh, this is going to $80, and Gareth's crazy. And the answer is it could actually go to 80. Sure, it could go to 100. It could go to 200, right? The idea is that when you use charts and technical analysis, you're getting probabilities. And so the probability is we have an extension move here on silver. It's overbought in the near term, and it's likely due based on the chart analysis, the multiple parallels that all intersect here around $54, $55 per ounce. It's telling us that there's a lot of headwinds up here. All right. And then it could pull back. And so the idea is, okay, well, if it does pull back, where do I want to buy for that next move up? And the answer is 40 to $45. That would be a great opportunity. And it would be a great discount, basically 20% drop from the recent highs to get us back into that buy zone. All right. Now let's go to platinum. Now, this is a really interesting chart. So number one, this candle is really not a good candle. Like this, when you have a reversal, so you had a big green here on the daily, and then when you have a one that's this big, it is a reversal, almost engulfing candle. That is a bad signal. Now, the question is, were we into a major level of resistance? And this is so amazing, folks, because what we can do here is, if we look at this, this is a level I've talked about. In fact, I gave this area of as a major resistance zone of where I expected us to go. And what we can see here, look at this. Look at how accurate this zone is. All right. So if we look at this, we have our highs. Let me just get my drawing tool back. Our high here, we kissed it here, right in there. We pierced it. And notice this was COVID, and then also this was 2021 in the bear market, when the market started to collapse there and so on. But then look at how right in here we hit it, we break down, right? And then we come back and retest. And then look, lo and behold, we're right back to that level. And so at least in the near term, this was a level that I gave out weeks ago as my upside target on Palladium. And as of now, we have hit it. And that candle, until we get back above this level, this is basically like the exclamation point on the short-term top, meaning that, sure, I actually think we bounce back because this is such a big drop. I think we could bounce back here, but then we likely roll over. Where would we buy this, guys? What do you think? So two levels, two possibilities. So one would be right here and one would be right here. And this, again, the idea is that longer term, I still love platinum and palladium, but longer term, 1370 down to about 1330, that is your buy major technical support zone. All right. Now, flipping over to platinum, platinum also had a pretty nasty reversal candle here on the daily chart. Big drop. The question here is, where did it go into? And this is so fascinating, right? So what we see back here is in 2012 of October. So here, this high was March, October, and then early of 2013. So 2012, the first two hits, and 2013. All you need to do is put a trend line right there. And then where did we just top out? Oh, look at that. Right into that line. Is that incredible? I mean, it makes a lot of sense because you could see back here in 2012, we went up, rejected, went up, rejected, went up, rejected, and then had this big bear market kind of in platinum for many, many years. So it makes sense that it's going to get rejected. Now, longer term, just like with silver and gold and even palladium, I still think it's going higher, but this likely is going to breed a pullback. Where would we be looking for the pullback? The answer is pretty simple here. So you have a couple levels. This one would be a little bit of a zone right in here, right below 1500. And then really we'd be talking about that area, even maybe as low as 1333. But essentially, the idea is anywhere in this level, in this zone, which actually isn't that far away, I would start accumulating. I'd leave myself maneuverability just in case it comes lower. You just never know, especially with the more volatile platinum and palladium, which are arguably even more volatile than silver. But that, again, I think that's an amazing point to draw on where we topped out on platinum here in the recent price action. So listen, I've brought a lot to the table here for you guys to think about. That's what my goal is obviously giving you guys alternative views to what you're going to find on social media or the mainstream media, but I'm using technical analysis, the simplicity of parallels, which are just trend lines that are parallel, and trend line analysis. It basically simplifies it to the point where I can understand it. And if I can understand it, you can understand it, right? And it just gives us such accurate readings of where things could be topping out after extended runs. So while social media pumps us up and makes us think, oh, it's going to $1 million per ounce or $1 million, whatever it is, reality needs to step back in and say, okay, I do think it's longer term bullish, right? But what about a pullback? Where are we going to get that pullback? Because things pull back. Even in bull markets, things still correct. And I think, again, the beauty of this parallels and trend lines, it gives us a basis for having concrete probability based decisions on where to buy or where to short. And that's really the end game here, folks, is getting something that's probability based versus just emotion based, which is what mainstream media triggers and social media triggers. They're garbage. All right. They will trigger your emotion to make ultimately the wrong decision at the wrong time versus charts. You're not going to be always right, but at least you're going to be right most of the time. 70, 75, 80% of the time, you can be right. You can be the casino, right? You know that, yeah, when gamblers come into a casino, there's some gamblers that walk out with money, but in general, enough gamblers come in that, you have 100 people, 1,000 people, you're winning a majority of the time is the casino. And that's why they're in business. And that's why it's one of the greatest businesses out there. All right. You guys have a great one. Thanks so much for tuning in. I'll talk to you soon. Take care.